in helping high salary earners and CEOs get consistent returns in the stock market using a simple trend following strategy in just 60 minutes a week. Welcome everyone to this live stream. So we're going to have a look at the markets as we are leading up to Christmas, just to see where things stand right now. Because leading up to Christmas, the markets normally become a lot quieter. The traders are away from their desks on holiday, enjoying the Christmas period. So we're going to see less activity in the markets. But as we go through Christmas and into the new year, we should start to see the markets pick up as well, pick up again. So I've got four charts ready to look at. So we're going to look at the indices so we can have an actual overview of the market. We're going to look at the S&P 500 first for the overview of the US market, the FTSE 100s to get an overview of the UK stock market, the dollar index so we can have an overview of the actual forex market, because when the dollar index trends, we tend to see trends in dollar related pairs. And also, last but not least, we're going to look at the chart for Bitcoin to have a look at the overview of the cryptocurrency market, because when Bitcoin trends to the upside or to the downside, the other cryptos normally follow suit, or if it consolidates, the other cryptos follow suit as well. So that's the reason why we've got Bitcoin on the list as well. So we're going to look at the S&P 500, FTSE 100, dollar index, and Bitcoin. So let's start here. If you look at the chart layout, we have the monthly time frame in the top left-hand side, corner of the screen. We have the weekly time frame in the top right-hand corner, and the daily time frame stretched here along the bottom. So let's jump straight into the analysis. Let's look at the S&P 500. S&P 500 is bearish for December, but we can ignore that because price is still inside an area of consolidation. Let me just mark this out with this rectangle tool. So from January this year, price went into a decline, so a correction, and has been in consolidation ever since then. We have resistance. The green line is last year's high. This is at $4,805, and we have last year's low, the red line here, at $3,662. So major level of resistance, major level of support. We need to see both of these broken. Price hasn't been able to break any of these levels for the whole of 2022. So as we go into 2023, we want to see moves taking place. We want to see levels of support and resistance being broken, and we want to see trends forming as well. Price may have found the base, so we have a major level. This is proven to be a strong level of support. If this continues to hold, then sooner or later we should start to see the resumption of this previous bull trend we've seen up until January this year. A look at the weekly, and the bars here are grey. So the daily and weekly have similar trend filters. So green, we see green when we're seeing a bull trend, red when we're seeing a bear trend, and grey when we're seeing a deep correction or an area of consolidation. So here during this trend, there were some green candles, but maybe 1, 2, 3 here and there. This is highlighting that we had a nice strong trend in play. So this is what we want to look at when we're looking at these charts. So this is why we have these trend filter colors here to make it easier. If we had these are based on moving averages. If we had these moving averages on the chart will be clustered, and we won't be able to focus on the main thing, which is price. So we have the trend filter just to make it a lot simpler to analyze. So as mentioned, the bars are currently grey, and price is in between the 50 simple moving average of this orange line and the 200 simple moving average of the black line here. As we come into a squeeze, we're eventually going to see a breakout. The tighter the squeeze, the bigger the move in the direction of the breakout. So as price in that direction, whichever direction it is, we don't know that yet, but when we have a breakout, anticipate a very strong move in that direction. On the daily time frame, the bars are red. Prices below the 20, 50, and 200 simple moving averages. If I just draw a trend line, we'll just show you how price has respected this trend line. Drawn in from the high of December. So I did this one incorrect. Let me just put it to the high. Yeah, correct. Better. So we can see that it made contact with this level in middle of August, and again in on December 1st and December, proven to be a very strong level. So in order to confirm that the trend is this down move, we're starting to see a resumption of the bull trend. The first thing we need to see is a break above the trend line, which also coincides with the 200 simple moving average. So when price breaks above these two resistance levels and also the $4,000 round number, which is a psychological level of support and resistance, a break above $4,099. So from this high, we want to see a break above this high and then a pattern of higher highs and higher lows going forward. That will be our confirmation that the bull trend is continuing to move to the upside. Until then, we may continue to see further moves to the downside. But remember, there is a major level of support just around this zone. So this should prevent price from falling, but anything can happen in the market. We may still see this level broken and we may see further lows. If we start to see lows being taken out faster, then it moves up. So there'll be plenty of short-term opportunities and probably a very small period of time. So we want to make sure that we are staying on point with the market and keep an eye on activities each and every day. So we've had a look at the S&P 500 strategies again. Let's look at the FTSE 100. So this is the index for the UK market, and this gives us an overview of how the UK market is performing. So right now, there's a reversal candle in play for December. The body of the candle is bearish. I was keeping an eye on this candle for the whole month. It started off weak, but I wanted to see if the buyers were going to be able to push price back above last year's high, so further to the upside. We want to see a break above this zonal area of resistance. So these two lines are called PIV 21 levels, and these highlight major levels of support and resistance. The first level being at 7,688. See strong breakouts across the board in especially the FTSE 100. The UK market is likely to follow suit as well. So we want to make sure that we keep an eye specifically on the S&P 500 and also on the FTSE 100 as well. The weekly time frame, not much going on here. A mixture of trend filter colors highlighting price is in an area of consolidation. Let me just highlight this here so we can see this area of consolidation in play, which has been in play since February this year. So we need to see a breakout to the upside or a breakdown below support. So I'm seeing some messages come through. Hi Ramin, hi Sydney, if that's your username. Hi Methos. No, Methods, I can see the message. I will, if you have any messages coming through, then please type them away and I will answer your questions. So doesn't look like there's any issues with my messaging over here. So please type in any messages you have through the course of the analysis. Okay, so where was I? So the FTSE 100 is in consolidation here on the weekly time frame, and just a note there, when we see a mixture of trend filter colors, greens, grays and reds, that gives us an indication straight away that we are seeing an area of consolidation. If you can identify chart patterns as well, we can see prices have just been moving sideways, up and down, and whipsawing past each other. That's first indication, and then a mixture of trend filter colors would be the next indication. Remember, when we see a bull trend, we want to see majority green candles, a bear trend, majority red candles, and we will see grey candles during areas of consolidation and deep corrections. And on the daily time frame, again, we can see a close-up view of this area of consolidation I highlighted on the weekly time frame. So not much to really point out here. We just need to see a breakout, as I mentioned, of the resistance level around this area here, 7,691, and the support zone here. So we have 6,706. Okay, I'm just looking at your question, Methos. Few bugs on your side. Okay, hopefully no one else is having any issues. It may be if you close other apps, you may have a smooth, so catch the replay once the live stream is over. So green and red, is that the RSI? Is that, I'm taking you're referring to the trend filters? No, these are based on moving averages. So simple moving averages. 20 and 50. So we just highlight it. Just gives us a visual indication of where how price is behaving. So if we are seeing green candles, so we can clearly see here price is in an uptrend, and when we see a mixture of trend filter colors, price is in consolidation. So we've had a look at the S&P 500, the S&P in the correction, waiting for a break period of consolidation. The bigger the move in the direction of the breakout. The S&P has been in consolidation for a whole year. Although it can be frustrating, once we have a breakout, we're likely to see a very long-term trend unfold, and that will provide us with plenty of opportunities to go long. So it will make up for that lost time on the sidelines. So next, let's move over to the forex market. Let's look at the dollar index. So we look at the dollar to get an indication of how the forex market may behave going forward. So you can straight away see I've highlighted this section here. So this is highlighting a long-term area of consolidation. So this consolidation began around March 2015 and continued to move sideways until we had this breakout in June 2022. So once we had the breakout here, we had a strong move to the upside, and then we had a nice strong move, but a correction so far, and also vice versa. The longer the trend, the bigger the trend, the longer the period of consolidation. So if you recall back in 2014 to 2015, there was a strong trend in the forex market, especially the dollar related pairs. And then following that trend, price went into a long-term area of consolidation. Then we've seen a breakout. And when we have a breakout of consolidation, we always anticipate a retest of the resistance turn support if we have a breakout to the upside. And that's exactly what's happened here. Price has broken out, pulled back to the consolidation zone area. As area, we're going to see strong moves in the forex market. So this is why we want to keep an eye on the dollar index, because when we anticipate moves in the dollar index, we can prepare ourselves for moves in the forex market as a whole. So right now, we want to see a bounce to the upside. Already there's a wick below the candle, so there was further weakness at the start of the month. The buyers pushed price back up, and now we want to see a close at this level of support. This will reinforce this being a strong level of support. On the weekly, so we have the support level on the monthly. We also have a support level here on the weekly, so that we have the 50 simple moving average, and the bars are currently red because we've seen a deep decline in play. And on the daily time frame, the bars are currently mixture of red and grey. But remember, we're at a very strong level of support, and if we have a bounce, the bars are likely to turn back to grey, then green again, and we also want to see a move above a breakout. So first indication, if we look at this down move from September, price has been forming lower lows and lower highs. So all we need to see is a change in this pattern. We just need to see a pattern of higher highs and higher lows. So if previous highs are taken out, then that's our first indication. Then we want to see price move above the 200 simple moving average, and then we want to see the bars turn green. Keep it simple, and you will be aligned with the direction of the overall market. So anticipate a bounce of support and get ready to start placing some positions in the forex market, if you do trade in the forex market. Well, and give you an entry. Yes, so there are plenty indicators and trend filters that are very similar. It's not which one you use, it's how you use it. So as long as you're keeping it simple, as long as it highlights areas in the market where we have bull trends, bear trends, and areas of consolidation, that's all you need. Don't complicate it. So if your trend filter coincides with this, that's great, because it will help you align yourself with the overall direction of the market. We are long-term investors, so we hold positions from aligned on all three time frames. Allows us to jump into a trend for the majority of the trend. So we hold positions for many months and potentially. So the dollar index is stable for now and likely to form a bounce. So let's see what happens going into 2023. And last but not least, we're going to have a look at Bitcoin. So Bitcoin is I've got the historical chart here. And one thing I want to first highlight is that if you look how big this decline is, this is roughly, if I just measure this with the ruler, so from this high in November 2021, prices declined to where current price is 75%. This is a very deep decline, and it dwarfs the previous area of consolidation. But if we scroll back, we can see how big this was at the time. So this was a very deep correction which turned into consolidation, and it dwarfed the previous area of consolidation. So if you look at this period here between November 2013 and April 2017, this did seem like a small area of consolidation. But if we, again, go further back in time, we can see how deep this move is, and we can do that over and over again. So we had this correction 2011 to 2013. And again, we can see this area here proved to be a very deep decline. So it did appear scary at the time, but Bitcoin does tend to form big, huge trends once we have breakouts. So right now, this is a deep area of correction, but if we scrunch our chart up, and if price does break above the all-time high at 68,857, then we're likely to see a very strong move, and then this will be a very small correction when we do have another correction form following the next bull trend. So don't be alarmed by these deep moves in Bitcoin, because once the trend does form, we're likely to see a very strong trend. But remember, it only lasts for a small period of time, so you always want to be on point and make sure that you are and conducting your analysis so that you can be ready once price breaks out. But as for now, price is in a decline on a round number, which coincides with this monthly PIV 9 level around the same area. On the weekly time frame, the bars are currently red, and we can see price is just moving sideways to down and below the 50 and 200 simple moving averages. And if we go down to the daily time frame, again we can see an area of consolidation. So right now price has formed this small area of consolidation, and this consolidation is below this previous area of consolidation as well. So we're seeing consolidation, a move down, consolidation, a move down. But one thing to note is that the heights of these previous consolidation zones going forward, they're getting smaller and smaller. So you look at the height here, and you just compare it visually to the height of the current area of consolidation, getting smaller and smaller, and that may be an indication of a potential breakout, because this will break out on the horizon. We anticipate a breakout to the upside because the prior trend was bullish. But remember, anything can happen in the market, so we don't want to second guess. We want to wait for that confirmation. And once price breaks out, then we act on that immediately and start taking positions, as long as our trading plan is aligned with what price is doing. So there's a support level below. So price continues to hold above this level of support at $15,500. And you can see the 200 simple moving average is coming lower and lower. Eventually, we're going to see a squeeze, tighten as tight as it can be, and then eventually price will erupt and break out. So if we have a breakout above the 200 simple moving average, we also want to see a break above the $20,000 rounds number. We also want to see the bars turn green and price form a pattern of higher highs and higher lows, and that will be our confirmation of a trend continuation. So we've looked at the S&P 500 and jump in as soon as positions are available. Remember, we are long. So some of you may be day traders, some of you may be entering positions sooner. But we are long-term investors, which is why we are standing on the sideline. But if you are day traders, you may have opportunities a lot sooner. But we are going to be patient and wait for positions, wait for breakouts to occur before jumping in and taking positions. So that's our pre-Christmas market. I can't see any more questions coming through. If you have any questions, feel free to type them in now. Nothing coming through here. So remember, even after I end this live stream, I will be able to see questions. So if you have any questions after the live stream, you're watching the replay, I will get back to any questions you have. So don't forget to updating you each and every day with the market analysis. We cover all markets. We cover the stock market, the forex market, the crypto, and the forex. I mentioned the forex market. So we cover all markets, also the commodity market as well. So trade commodities such as gold, silver, palladium. I know there may be some of you viewing that are day traders. See something here that may give you an indication of when to actually take day trading opportunities. So we may highlight trends in the market, which may give you indication of when is the best time to actually go long, short, or stay on the sidelines. So yeah, nothing at the moment. So here, I'm going to end the webinar here. I hope you all have a fantastic Christmas break and a happy new year. And do keep an eye on our profile, because we will still keep you updated with the